Hey traders, checking in on the stock market today. We got a lot to talk about. The trade game plans from yesterday played out wonderfully. We'll review that, and we're also going to go over gold, silver, and copper as the metals start heating up. Let's check out the charts. Before we get to the charts, we've got a free ebook. If you click the link in the description of this video or in the comments, it takes you to a website. You enter your email, we send you a free ebook about establishing a trade game plan. And shout out to Lamont who put it together. Free resource, free information. Why not? So if you look back at the video from yesterday, if you didn't watch it, go watch it, because the trade game plan that was laid out as far as what I'm looking for and what I need to see, it all aligned and it went really well. So we have CPI numbers tomorrow, and that's really the bears' last short-term hope here as far as hoping for a rejection from some resistance levels. Because again, we know we're watching for the potential of a weekly lower high, but there's also the possibility, in my opinion, if we see a bullish reaction to the CPI numbers, a lot of bears are going to convert over to bulls. And in my opinion, it could be a catalyst for a significant momentum, not a momentum shift, a sentiment shift. So sentiment, you've had plenty of bulls, plenty of bears, but a lot of bears out there. And the side of the ship, at least in my perception, which is obviously very limited as far as what my avenues are on social media, but it seemed pretty balanced out. And I believe if we get a bullish CPI number, then more people are going to be coming to the bull side of things, and we'll see. A lot of bears right now are really hoping for the Hail Mary. Maybe not hoping is the wrong word, hopefully, but looking for a Hail Mary of Russia invading the Ukraine as a bear scenario. But honestly, with the price action that I'm seeing, there has to be some kind of news catalyst to reverse what we have seen. This bounce is much too significant, in my opinion. With XLF coming within less than 1% of the all-time high today, and Apple just a few percent from the all-time highs, I do believe we need some kind of catalyst. The Fed doesn't say anything for another month plus. So what's it going to be? Because bulls set daily higher lows, and here we are testing resistance. So looking at SPY, there's some gaps out there, but we know as long as the bulls hold 443.83, they keep control of the daily uptrend. Lower high, higher low, higher high, higher low. Here we are testing resistance. Can we continue the uptrend? We have to break 458.12 to do so. Now, we don't have to do it tomorrow. Bulls obviously would prefer, if we did, to just continue that daily uptrend. If we were to see a bearish reaction to CPI numbers, it would be possible to set a higher low, tighten up, and then get a bull break. And we would need major bear volume to just break support, which is a possibility, but it's not the most likely scenario in my opinion. If we get a bull break, there are limited resistance levels back to the all-time high. So key level in play. Nasdaq, same deal. QQQ bulls have more work to do. The daily higher low set here as well, 351.97, but we must see the bulls break the high of 370.10. And we can see SPY just now was what, 0.4% away at most, and QQQ still needs 1%. So we've got a key resistance test tomorrow. And QQQ has more work to do. The bounce is not nearly as impressive on the weekly time frame. We could still reject and backtest these EMAs that are on the verge of crossing bear for the first time in a very long time since the COVID dump. So if we were to top out on that weekly lower high, yeah, it's a decent bounce, but there would still be a bear scenario on the table. And really it is QQQ that is the bear's hope, because it is the weakest, aside from IWM and growth, it's one of the weakest sectors here. It's not XLF or XLV that are a lot stronger. QQQ needs another leg up if bulls are going to start being confident with the size of this bounce. One thing to be aware of is the Nasdaq and the S&P 500 futures charts. Look at the 4-hour time frame. We went straight from the low of yesterday to the high of today. We have not consolidated. So I wouldn't be surprised in the slightest if we see some 4-hour consolidation overnight tonight. But again, CPI reaction tomorrow pre-market is what we're looking at as far as the next potential short-term catalyst from here. So in the video yesterday, we talked about Facebook looking for an oversold bounce and being a catalyst, saying QQQ is positioned well, and if Facebook starts this daily bounce, QQQ is very likely to set that daily higher low. And we saw a bunch of other individual tech names. Google looking for the daily higher low. It got set. Amazon saw a gap up open and not a lot of follow through. It was actually one of the weaker names today. But who else gave us that higher low? Apple was the daily bull flag. We're right up there at that resistance. Microsoft was looking for the daily higher low. It has confirmed off that quadruple bottom. But really, it was Facebook leading the way. And again, it's a very weak bounce at this point. But It was enough for the bulls to be positioned well, and then Facebook with its 4% weight in QQQ helping push further. So I did make an entry in Facebook today, and it was just a very clear tightening range. So I need a level to play off of, right? I'm not going to chase, and I'm not going to catch a falling knife. So we broke the high of yesterday first thing. So that's a good start, breaking the hourly downtrend. Then we just tighten up. We set a 5-minute higher low, lower high. The bear break with 0 follow through, we broke by 12 cents. So it's pretty much a double bottom, but we did break. And the fact that it saw 0 follow through, okay, I'm now interested in a bull entry. We then had another rejection. I said, all right, this is tight enough. I got to make a play off this. So I entered in the upper 224s, and I put my stop under 224. I was literally risking about $1 with some wiggle room, and that was it. That's how you establish the risk and reward to be favorable. Again, if we're dropping down yesterday, where does my stop go? I don't have any levels to be playing off of. Here, I'm risking less than 1%. The risk and reward is in my favor. I sold half of that position on the 5-minute bounce to then be risk-free. Can't lose on the trade. If we drop down, I stop out, break even, and we didn't. So I am in a swing position now. And I am aware that CPI is definitely an extra added risk. I got a lot of profit cushion today from the swing positions I already had open and added Facebook significant gains to that. So again, it's the worst case scenario if we have a bearish CPI reaction. I do still have some SQQQ to offset a little bit. I do have a bull lean overall in my account, but I will give back profits if it's a bearish CPI reaction. So the risk and reward scenario for this trade here, again, I took half off, but it was $1 risk and reward ended up being $9. That is the kind of position you want to put yourself in with trading. Small risk for the potential of significant reward. Could not possibly guess that we would head up to 233 from here, but I positioned myself to benefit in case that daily bounce gets going. Now we're watching the hourly, which has not confirmed a trend change yet, so we know we're going to have to see an hourly higher low and higher high eventually, but we're scouting a daily lower high to be the result of this bounce, and the most important level for me is 248, because whether or not we break 248 is going to determine whether or not we get into gap fill territory. And again, once Netflix got into gap fill territory, it really turned on the jets. Netflix was another name that we were scouting that daily higher low, and it was set. Semiconductors had a big bull day today. It was another name where we could say these names are positioned well if QQQ sets a daily higher low. So here we are with big bull volume, high of the day close, daily trend change confirmed for the first time in a long time. And QQQ has not broken resistance yet. So obviously we're stronger. SOXX is the other ETF. It broke bull. NVDA was up 6% plus. Beautiful follow through. Again, NVDA was a daily back burner. And back burner trades, when you're looking for an hourly back burner, they happen real quick, right? They play out in an hour or two and you know whether it's successful or not. This kind of trade takes days or a week. And you almost forget about it. I almost forgot about it. We went from all-time highs. We were scouting a monthly higher low as the most likely scenario. We were hitting monthly EMA 12 and the daily RSI was oversold. And now in hindsight, we've got a 30% bounce, a little bit less, 28% bounce from back burner first daily oversold conditions. Congrats to the bulls that stepped in front of the fear train and took advantage of that opportunity. SPY was the same, wasn't it? SPY was the first daily oversold. Yeah. First daily oversold. Granted, the first day we hit oversold, we didn't bounce, but it was the next day. But it was first oversold from all-time highs. So these back burners are working on other time frames as well. I generally just stick to the 5 and minute and the hourly as a day trader, but nice to see confirmation that the daily's working as well. So NIO swing position, this has been my main swing position and played this bounce real well, except for exiting too early, but got the chance to reload knowing we would have to change the daily trend. So reloaded that position on Friday and then just waited, and now getting paid for it. So daily trend change confirmed, still in that position. As long as we're in an hourly uptrend, I'm going to keep holding it. And next resistance level, we're looking at a gap fill at 27.22 as a potential short-term target. And we know we're scouting a weekly lower high. But as long as the bulls keep short-term control, I'm going to keep holding this position. Because I'm thinking bigger picture. And honestly, the reason I started looking for an NIO position was number one, it was crushed. But I looked at this 4-month chart, and I probably talked about it in a video over the past week or two, where you show me this as a monthly time frame, and I'm interested. It's the 4-month time frame. It's going to take forever to play out, but massive move up, big time consolidation. You scout the equilibrium. XLV, bull break, daily bull flag confirmed. Next resistance level is 136.83. And again, the weekly time frame at this point, it's a solid bounce. The retracement is over 50%, creating space for a weekly higher low once we top out. And again, let's not forget Bitcoin. Bitcoin made me more money in stocks. So on Friday, when Bitcoin bulls showed up, and I said, the crypto space is extremely bullish and stocks are not bullish. I'm making note of that. I started building positions on Friday because of Bitcoin. Maybe I would have entered that NIO trade anyways, but I used more size. And then I was talking about on Twitter on Monday, the cryptocurrency market cap increased 17%, $300 million over the last 4 days. I'm surprised that confidence is not bleeding into the stock market. And then today, it obviously did. Growth names did really well today. So make note of that. Crypto gave a very clear early signal that was days in advance. And in my opinion, it was a great signal. Again, it's not enough for me to say, oh, well, crypto's up, I'm buying stocks. It was me looking for these bull entries. And then this was just another little aspect of it. Okay, well, crypto's up. That gives me more confidence. Maybe I take larger position sizes. It's not going to make me take a trade or not, but it's going to impact my confidence of the trade. And my confidence means, what is my position sizing? If I'm not confident, I'm a small size. If I'm confident, I'm big size. So crypto helped with that. And the strength over the last 5 days in crypto is bleeding into the growth world. Again, crypto was crushed for months, a couple months there. And you just look at these growth names, BKKT, which is a crypto related name, stair step drop on the weekly time frame, broke bull at 466, and we've now gone over 100% off that low. And then you have all these other names. We know PTON has had a ton of headlines, but it was absolutely crushed. Big gains off the lows. And again, it was the broader market hitting a fear low, and the names that were already crushed before the broader market even saw any weakness getting the bigger bounces because they were as crushed as you can possibly be. And so growth is seeing the bigger percentage bounces with this market bounce that we're currently seeing. That was a tangent. So XLV, the good sign about setting daily higher lows is they are now our lines in the sand. They are our clear levels. If this level is holding, bulls have complete control. It just helps us keep things nice and organized and clear. XLF all-time high was in play today. It was 1% away. So higher low every day, 8 days in a row now. If we reject from the all-time high, it's a potential cup and handle. You know, if we bull flag here, we'll have to see what the CPI reaction is. But again, you can't have broader market fear if one of your top 3 most important sectors is testing all-time highs. V-shaped bounce. Very impressive. And the names that are correlating with it, benefiting significantly as well. We know the energy sector has been doing really well. They benefited over the last couple of weeks. But the travel names, wrong one. CCL. CCL with a huge move off of its lows here recently. And Jets, the correlation to XLF, definitely helping these names. Jets hitting the highest price in 3 months. IWM, so growth, daily trend change confirmed. Nice strong close at the high of the day the last 2 days in a row. We know with the daily trend change, we're zooming out, we're scouting a weekly lower high. Anything under 227.13, we're not going to get caught up in bull FOMO. We know the weekly lower high is the most likely scenario, but we also know the bulls have complete short-term control. The hourly uptrend is our short-term guide. When we lose the hourly uptrend, we're going to scout a daily high or low. When we lose the daily uptrend, our weekly lower high is set. And that is how trends work. And once you comprehend that and how all these time frames overlay and interact with each other, it's like riding a bike. It clicks 5-6 months into doing this, and it opens up a world of clarity. So next level, 208.99. Biotech sector, daily trend change confirmed. Double top breaking, great sign for the bulls. Nice follow through over that double top breaking. Pretty much a 2% move from there after already being up on the day with the gap up open. Weekly bounce underway. We know we're scouting a weekly lower high. We rejected from EMA 12 the last time around, but the bulls have complete short-term control. The bears have long-term control. The bulls have short-term control. That's where things get tricky, but you got to determine what time frame is most important to the trade that you're interested in and stick with it. So I'm going to watch the hourly uptrend as long as we're in an hourly uptrend. When we lose it, I'm going to watch the daily uptrend as long as we're in a daily uptrend. And when we lose it, our weekly lower high will be set and the burden will be back on the bulls to try and confirm a weekly trend change if we're going to see any kind of longer term trend change. USMJ, big day today. So USMJ, man, there's so much I want to talk about. We need 3 videos. So USMJ, there is a significant constant opportunity where Canadian MJ goes up significantly and it happens real fast. Why does it happen fast? Because that's where the dollar volume is. That's where the automated trading is. The arbitrage bots, the correlation bots, they are present on the Nasdaq and the NYSE. So CGC has a bullish earnings reaction and shoots up and has a big day. At one point, we were up something like 17%. We are in a daily uptrend, and it was a notable move. With that, all of the Canadian MJ peers went up very quickly as well. So next thing you know, you're looking around, okay, well, everybody in Canadian MJ is up 7 to 9%, and US MJ, we're all up 1 to 3%, and some of the names were still red. And so when that happens, when it's not just one name, it's the whole sector, when all of Canadian MJ is green, look to play USMJ as laggards. This trade has worked time and time and time again. Eventually it'll stop working once we uplist, but until we uplist, the fact that USMJ is on the OTC and Canadian MJ is on these higher exchanges, yeah, it's a bummer overall, but there are ways we can take advantage of it. And this is one way where I looked at this and I said, okay, well, I missed the Canadian MJ move. I was focused on Facebook and everything else, and I wasn't going to chase Canadian MJ, but I looked at a name like Curaleaf and I said, okay, at that point in time, Curaleaf was red. It was right at break even, and we had an $8 level, $7.97, $7.99, $7.97. We got a quadruple top at $8. And I look at this and I say, okay, that's a nice tight constricted range. And if we break $8, that's the go signal. So I even entered before we broke $8 because I'm confident enough in this laggard play. I've seen it enough times that I just bought a pretty sizable position at $7.95 or something. And so, yeah, I missed, the big move in Canadian MJ, but rather than moping or trying to chase it, I ended up getting a 3 or 4%. Well, at this point, it's a 5% move in CURLF. I did take a little bit off at 820 to drop my break even. My break even at this point is probably down at, 880 or so, or 780. But there's a trade opportunity there, and that's just through observation. That's just through watching the sector every single day for months after months. And even though I'm not making money trading that sector for 95% of the time I've been watching it the last 6 months, it sets up the knowledge to be able to act on this kind of laggard move. So USMJ had a great day today. And again, it's the growth names responding after crypto gave us the early signal last week. Last Friday, it was crypto and USMJ. USMJ had a big day, but we're getting the follow through now as well. Again, weekly time frame, tons of work to do. The bulls are not proving anything on the long-term time frames. We've seen this before, and it led to lower lows. Is this time different? I couldn't possibly say. I'm going to position myself to benefit if this time is different, and it's a longer-term cycle shift, and we eventually see a weekly trend change. But we'll have to wait and see. I'm taking it one day at a time. 25.23, next major resistance. Hourly uptrend will be our guide. Plenty of space for an hourly higher low to try and form next consolidation. Clearly a momentum shift underway. And all it took was finding the bottom, the fear bottom in broader markets. MNMD, still looking good in this swing position. So again, I trimmed down on a little bit on Wednesday, or no, today's Wednesday, a little bit on Monday, a little bit on Tuesday, back down to a swing size position, but a great day today for the bulls. Again, this is your highest risk, highest reward sector. Waterfall stair step drop, can't get any more beat up, but when the broader market sets that fear bottom, these most beat up names are the biggest bounce leaders. So we've got 146 as a key resistance level from here. We're almost up 100% from that low, and yes, we're just looking for a weekly lower high, but we're creating the space for a weekly trend change attempt later on down the line. All right, on to commodities and the dollar. The dollar. I did take a little profit today in my swing positions. So now I've got Facebook, NIO, MNMD, VRNOF, CURLF, MSOS. So I have more positions today than yesterday, but I did size down a little bit on some of them. And again, I took some Facebook profit. I took some Curaleaf profit along the way. So we'll see what tomorrow brings with the CPI numbers. I'm thinking bigger picture, longer term for MJ and psychedelics. I'm trying to position for a cycle shift and multiple month holds, but I need the broader market to head back to all-time highs if I'm going to have that kind of longer term conviction in the sector. So dollar is trying to bounce on the daily, but still weak. It's still a potential bear flag. CPI numbers are going to significantly determine whether it's a bear flag testing the low or whether we get more bounce followed through to no longer be a likely bear flag. The metals are still extremely strong. Again, I've been talking about the 2-week time frame as what is most important to me because this is a multiple month equilibrium forming. Low, high, higher low, lower high, and now a quick little higher low. The clarity isn't fantastic, but it's clear enough for me. If I'm making any kind of entry, I am stopping out if 1780 breaks. That is a must-hold level for me. My ideal trade, if this is going to come to me, is a bearish reaction in the metals to CPI. This is the 2-day time frame right now, and I want a tightening range here, and I will buy consolidation, and I will put my stop under 1780. And silver has further to go. Again, 2-week time frame, tightening up. Most important level is the high from a couple weeks ago. 2-day time frame to condense things down. A lot of space for a lower high here. Not worried about missing the silver train because even if it's a bullish reaction to CPI, I'm still scouting a lower high compared to 2470, at least initially. So I am looking for entry on consolidation. I would exit. Here's an example of stop losses. Do I use 22 as a stop? No, I use 2194. Why? Because they're levels right next to each other. I'm going to use the lower level. I'm going to take that a little initial risk because the last thing I would want to do is see the price break 22 and hold 2194 and I stop out. So I use the lower level when there's two levels very close. But I'm scouting entries on daily consolidation and I'm patiently waiting. And again, maybe I'll miss the trade, but I'm A-okay. No FOMO, opportunities everywhere. Miners, same deal, 2-day time frame. Anything under 33.19 is a lower high. We may need to tighten up a bit further. And if we do, if we get the scenario that I want, then we're going to get real tight into the end of February, and we can then expect a volume and volatility spike in the metals. Copper is not waiting around. Copper daily trend change, breaking to the highest price in months. Look at the monthly time frame. We've just been grinding EMA 12. It was a monthly equilibrium. It still is actually. High, low, lower high, higher low. The most important level is 482. If we do not break 482, it's just another monthly lower high. And we stay within this tightening range. If we do break that level, it's a bull flag. This is condensing it down. Nah, we'll stick with the monthly. It's a bull flag confirming. So after a massive rally, this is extremely healthy consolidation. How can we gauge that? What's the retracement? Less than 382. Okay, potential bull flag. Are we holding EMA 12? Yes. Those are your two clear signals that this is healthy consolidation. And that's why I'm interested in gold because the two, great. At least we got to the end. The 2-month is doing the same thing as the monthly for copper. Consolidation, grinding EMA 12, and tight. We are going to see. I can't say the direction it's going to break. I can give a probability lean to the bulls because of the previous price action, but we are going to see a volume and volatility spike in these metals before the end of Q1 2022. So we'll be watching for it. All right. I'm keeping an eye on crypto for clues as to when weekly lower highs are going to shape up in our growth names that are bouncing, just to see if we get an indication that Bitcoin may be giving us a weekly lower high first, because we're scouting a Bitcoin weekly lower high, just like I'm scouting an NIO weekly lower high. And if you've been watching this channel, you know that I have been using crypto to trade growth stocks and growth stocks to trade crypto for the last 2 years, and it has really helped me. I have been extremely impressed and delighted with the additional information that I get from watching both of these markets so closely. And I didn't anticipate that they would be so helpful one against the other. But the more that cryptocurrency gains market cap and institutional backing and an aspect of macro planning and hedging and all that, whatever, it's going to continue to have these relationships with our legacy markets, and they're going to continue to develop and evolve. And we're going to be on top of it. All right, exciting day. And we'll see if bulls can keep the gains on CPI numbers tomorrow. SPY and QQQ still have proving to do to break the highs of these bounces to this point. Do good things. Appreciate you. Check out the ebook. Another work in progress. You know me, I don't like boring walls. You being a real good girl. Thank you, Mom. Hey, Turkey.